A lot of analysts are now calling for a massive correction in the price of Bitcoin. We're not talking about a 10% or 15%. We're talking about something like a 35, 40% type correction. And this is predicted to be relatively imminent, right? So last week, we were all talking about Grayscale slowing down their sales and the purchase of Bitcoin by companies who are seeding their ETFs are going to make the price explode. But now they're calling for a major correction. And here are at least three of the reasons why this is actually viable and likely or possible, rather than likely, possible in cryptocurrencies. Well, the first reason, of course, it's crypto, right? Anything can happen in crypto at any time. And you just have to be mentally prepared to understand that what goes up must come down. What goes down usually comes back up in crypto. So it's not unheard of to have a 35% correction in the price of Bitcoin, leading to even more cataclysmic crashes in altcoins, especially those in the microcap region, right? While this would be an absolute disaster in the stock market and traditional finance, in cryptocurrencies, it's just a bad month, right? And if you consider first that we've had several months of ups and ups and ups in the price of Bitcoin, even up till now, that a little bit of correction is actually kind of due. I mean, we sat in extreme greed for quite a long time. And even now that it looks like there's a little bit of FUD in the market, we're still sitting in greed and in the upper quadrant of greed as well, on the border with extreme greed, just so you know how bullish everyone is. Now, of course, the second reason is that we have probably what is the most important Bitcoin event this year, certainly one of the most important, if not the most important event in the Bitcoin calendar, and that's the halving, right? So the halving is taking place in about, less than a week, right? So it's very, very imminent. And of course, the entire cryptosphere is so bullish about the halving. Everyone's talking about the price is going to go stratospheric once we've gone past the halving. Now, everybody that's experienced the halving knows that the charts don't just go parabolic after the halving. Usually there's some sort of cool-off period where things are shaken out, things are sort of, a bit of volatility happens, and then we see the rise, right? There's a little bit of time delayed, a few months usually, before the market really takes off. And what that does is opens up a little space for speculation, FUD, FOMO, shaking the market, liquidations, all sorts of things, right, to happen before the kickoff start. There's also the opportunity for a sell the news event, which some analysts have been calling for as well. Now, another wise thing to consider is usually in investments generally, when 90% of people are facing one direction and 10% of the people who are usually more experienced traders and investors are facing the other direction, is because they realize that the market sometimes will move in the direct opposite of what everyone expects. So while everyone is sitting down expecting a massive pump in the price of crypto because the halving is in less than a week, it is possible to see the market go in reverse of what people are expecting. Now, when you think about XRP is an altcoin at the end of the day. So if Bitcoin were to take a 30% hit in its price to the negative direction, you can expect XRP to do the same, if not a little bit worse. Some coins like Stacks and Solana, Cardano are also going to take a massive hit. But those in the micro caps, some memes especially, can get absolutely wiped out, right? So, if Bitcoin takes a 30% dip, I expect something like Bonk or one of those sort of, something with hats, whatever with hat, to take 80 to 90% hits, right? Not financial advice, of course, do your own research. There's also precedent for this. In the last bull market, obviously we had a black swan event, which was the pandemic and the lockdowns. We saw 85% wipeout in the market because Bitcoin took a huge dip. And of course, that happened before the rally into the all-time highs. So if we think about it, it's sort of to be expected anyway for crypto to act this way. The only reason why we have not expected it to happen maybe this time is because we have a different player in the game, right? We have a different factor in the game, and that's the ETFs. We have BlackRock, we have Fidelity, we have JP Morgan, we have all these massive organizations who are seeding ETFs. We have ETFs popping up all over the world. And we have seen them prop up the price of Bitcoin so high, such that it's gone above the all-time high for the first time before the halving. So it wouldn't be too crazy for it to correct a little bit, because if you think about it, we're not supposed to be this high just yet. We really should be maybe in the 50s, even in the high 40s. That's where we should be without the ETFs and the special elements that we've had. So this bull market, we've kind of been spoiled to reach, these levels that we are now. Now, not financial advice, but if you are a long-term hodler of cryptocurrencies, you know that the best strategy is basically just to do nothing. You could prepare some dry powder, if you have some, to take advantage of if this does happen. Because can you imagine if Bitcoin crashed 45% and things like Solana crashed like 60%? What an opportunity to more than double your money when the rally comes back and it does 200%, right? To, over $200. Again, not financial advice. Now, if you don't have any dry powder, again, not financial advice, please not do what I say, do what you want to do. But if I was someone that had no dry powder, I had a little bit of crypto and I'm in the green, this might be the time to maybe take a little bit of profits into dry powder to prepare for such an event. Of course, this event might not happen and the direct opposite might happen. We might suddenly see a parabolic pump in the price of the token, which of course would disappoint people who are trying to swing trade, and they might have to take a haircut. Those who are long-term hodlers, again, either way is great. If the price goes up, fantastic, my portfolio skyrockets. If the price goes down, who cares? I know it's going back up. I've been through a bear market of 97% corrections, so a little bit of a 20% correction isn't a big deal. Besides, if I'm a long-term holder with dry powder, it's just more opportunity to put more money into the system, not financial advice, do your own research, and make even more money. So the question is, why will people like BlackRock and Fidelity and all those guys sit back and, will they stop buying? And how would they allow the price to crash as much? Well, if you think that they also are a money-making organization, right? Each one of those guys are there to make money, full stop. They don't care about Bitcoin. They don't care about the future of inflation, except, of course, how it affects their own bottom line. They don't care about the future of the world or, reaching people in remote areas that are unbanked. None of that bothers them. What they want to do is make profit on their investment, return on investment. And who knows, maybe the analysts also might advise them to cool off on the buy-in for now and wait for the massive correction so that they can go all in and buy as much as possible. The last case that I didn't talk about, of course, is that the government is doing its best, obviously also to mess the whole thing up, right? We have election year in the United States, so legislations are sort of on hold at the moment. We have the SEC running amok. We have, the CPI data, which is absolutely catastrophic. And we have the Jerome Powell and the Fed, who are just dilly-dallying, flip-flopping on what they're going to do, creating even more uncertainty in the market. And uncertainty is the worst possible thing when it comes to speculating the price of cryptocurrencies or just finance generally. And unfortunately, because we have so much Wall Street money now in crypto, they treat cryptocurrencies, Bitcoin specifically, as a tech stock, right? Which is high risk, first to sell stock. So when there's anything like a threat of a rate hike, a downturn in the economy, anything, the tech stocks are some of the first to go. Goodbye Bitcoin, goodbye Microsoft, goodbye all of that stuff, because they're seen as, risky. Of course, you and I know that Bitcoin is nothing like a Tesla stock, But that's for us to know and for them to speculate. Not financial advice, do your own research, and I'll see you guys in the next video. Peace.